Hey Traderstation, what's going on? It's Christos, Traderstation. I know I have not been around much. I haven't really been interacting in the chat, and that is because, well, to be honest, I kind of stopped trading in the Forex markets. All you guys that have been with Traderstation for a while know that, I've always talked about how I'm kind of trading a lot of markets. I trade the options market, I trade the futures market, I trade the Forex market. I used to trade penny stocks, which is a terrible idea, by the way, for anyone new listening. But anyways, I'm just very curious about all markets, and that's kind of what I've been doing, just kind of exploring and developing myself in each market. And some people like to find one market and really try to master that market, and that's great. And other people like myself, my personality just curiously swayed me to all different markets. So right now, in the last couple of months, I just kind of, I stopped trading the Forex market for whatever reason. I was really swing trading it, and that's a lot different than how I've been trading over the past 2-3 years. And I did like it for a little bit, but I just kind of grew out of it, and that's what happens as you develop yourself. You move in and you move out of different markets. So that's why I've been quiet. While I still pay attention to Forex charts and stuff like that, I don't want to sit there and be analyzing and calling out trades or anything like that, because then I'm not putting my money where my mouth is, and at that point I'm just another fake Forex guru like the millions you can find on Instagram. So I let the guys, Jeff, Mike, and DJ talk about what they're doing, where they're putting their money, because that's what you guys are trading. I'd be happy to talk to anyone trading, in the options market, not binary options, American options. I'd be happy to talk to anyone trading in the options market and the futures market. But it just doesn't seem like a lot of you guys do that, and that's fine. Forex is your thing, then Forex is your thing. Go for it. Trust me, you guys are in good hands. And then of course binary. Doug's the binary king, and he proves it to you guys webinar after webinar, day after day. You guys are in really good hands. But nonetheless, here I kind of just want to talk to you about what's going on in the world. Okay, what is going on in the markets? I'm sure you guys have read all the fear articles and, oh my gosh, we're having a correction or a crash or yada yada yada, and that's what I want to talk about here. I kind of want to give you guys what's going on in the bigger picture. What's going on in the U.S. markets. The U.S. market he runs the world pretty much. So even if you're only trading Forex, you really should know what's going on in the U.S. market. And what's going on in the U.S. market right now is fascinating. It's history. It's so cool. And I just kind of want to show you guys something here. So this is the S&P 500. This is like the main benchmark that everything's tracked against. And people, Americans in their retirement portfolios, they see how good they did based on how well the S&P 500 did. So this is actually the SPY, SPY. It's an ETF that tracks the S&P 500, and it's a monthly chart. So each one of these bars represents 1 month's worth of trading. So each line here represents 1 year. There's 12 bars in between each of these lines. 12 bars, 12 months, 1 year. So this goes back to all the way to 1996. Right here is the 1996 price action. And over here is the 2015, 2016. This is the January bar for 2016. So I just want to show you what's going on. Look at how we went up in 96, 97, 98, 99, and then 2000. This is the year 2000, and what do you see? How is this year different from these years? These years we basically went straight up, and then this year, look what we did. It was sideways. Every single bar overlapped each other. This is trading range price action. So we had 1 year of sideways, and then it was the internet bubble, and that's what caused this dramatic sell-off. Now, from the highs in the year 2000 to the lows in the year 2002, at the end of 2002, you're talking a 49%. Okay, it went away. It was up here. It shows you the percentage. 49% move in 3 years. 49% negative move in 3 years. So think about the mom and pop investors that again pitch these beautiful financial packages from these scammy banks. Okay, and their financial advisors come over with beautiful binders for them, and they make them feel like they're diversified and loved and taken care of, and all that bull crap for any, people under 18 listening. So think about that. Think about the mom and pop investor that started investing here. They put $100,000 in. Okay, after 3 years, in their first 3 years, they're down to $50,000. They lost half of their nest egg. The average retirement portfolio for an American, for a person in their 60s ready to retire, is $1 million. Imagine if they were ready to retire. Imagine if they had 1 million, okay, and they had 2 years till retirement left in the year 2000, and they went into retirement losing 50% of that. So from 1 million to 500,000, I mean, it's such a dramatic impact on so many lives. And then look what happens. Look how long it takes to recover. 1 year, 2 years, 3 years, 4 years, 5 years. It takes 5 years to get back to these 2000 highs. So here we are 5 years later, and the people that just started investing here, or the retirees that held through all this and said crap, that's all they can do. They hold and pray. That's what their financial advisors tell them to do. They don't know any better. It's not their fault. They're being fed bullcrap. And they waited 5 years, finally got back to that level, and then look what happens. The housing crisis. Okay? So this is 07 now. So from the highs in 2007 to the lows in the beginning of 2009, 57%. 57% down from high to low in a year and a half. That is crazy. Again, think about even just new people coming into the market and investing here, because the housing market's great, the retirement, the market's going well, this is awesome, we're just gonna go straight up, we're finally back to the 2000 highs, we're going forever. And they invest, and then over 50%. Or again, think about the retirees that are retiring in a year or two, and this is what happens. At 2007 they say I got 2 years till retirement, it's gonna be easy breezy, and then bang. And this doesn't seem much, but from here to here, which is only 3 months, 20%. You're talking 20% in 3 months. That's crazy talk. Alright, and then let's see how long it takes for it to get back. 1 year, 2 years, 3 years, 4 years, 5th year. In the 5th year, we got back to the 2007 highs. In the 5th year. So again, it takes another 5 years to get your money back. And I think what you can see, we go straight up, and then what tips us off? 1 year of sideways. 1 year of sideways, and then we drop. Same thing here. We go straight up, and what happens in 2007 right here? 1 year of sideways, overlapping bars, 1 year of sideways. And then, we crap the bed over here. So look at what we're coming to now. Alright, we've been going up for 5, 6, 7 years now. And in 2015, boy, does that look familiar. Sideways bars, trading range price action. It looks pretty familiar to here, and that looks pretty familiar with here. Okay, so now think about the retirees. Think about the 60-year-old that's been working their entire life, and they only have a couple years till retirement. Do you think it's a good idea for these people to stay in those mutual funds that the financial advisor is pitching them from the bank that they work for? Do you think it's a good idea to risk? Because these packages mirror the S&P 500. Plus or minus 2%, or plus or minus 7%, or they have, conservative, moderate, and aggressive packages, which to me is really stupid. because you can just invest in the SPY and it has the same investment objective. It mirrors the S&P plus or minus 2%. And they also have like, the SPY times 2. So it's going to do whatever the SPY does times 2. And they have all types of ETFs, accelerated ETFs, the whole nine. So these financial advisors aren't pitching us anything that we can't do ourselves. But just look at what we have here. We have the sideways year. Is it worth it for these people to risk a 2000 and 2003 or 07 to 2008? Is it worth them to take on this risk if they only have a couple years to retire? Or if you're just starting to invest, is this when you want to start to invest? And the answer is no. And look, anything is possible in the markets. So while I'm bearish and a million other people are bearish, anything can happen. This does not have to happen. In fact, we can go sideways and just break out and go on to new highs. But is it worth it taking the risk? Does the downside risk outweigh the upside potential at these levels? And I think by looking at this chart, someone who doesn't know anything about technical analysis can just look at this chart and go, well, the bars were going up this whole time, and then all of a sudden you started getting like overlapping bars, and then a big drop. And then, the bars just kept going up in a straight line almost, and then all of a sudden we start getting this overlap here, and then a drop. Well, what's happening here? The bars are going straight up, and then bam, there's that year of overlap, that year of sideways. It's pretty scary. It's like I've seen this movie before. I've seen this movie before, and I myself have family and loved ones in these financial advisory scams, for lack of a better word. And I'm warning them, liquidate your positions. You guys have a year, 2 years till retirement. Liquidate. Who cares if the market goes up another 5-10%? Who cares? Right now, you're worried about protecting your capital, and you're not worried about your return on capital. You just want your capital returned. Whatever you got, you just want it returned. Okay? And people can say it's, I'm sure you're reading the news about, economic slowdown and China this and China that. Here's the Chinese ETF. This is just a bunch of bullcrap. But look at how far we've come down. 40% from the highs of this year. China has dropped 40% off its highs already this year. And, is that what's triggering the U.S. stock market? I don't know. I don't think so. I don't care. All I know is what's happening. Why is China all of a sudden, because China's going down, the U.S. stock market's going up? What about all this? What about when the stock market was rising dramatically? Why wasn't China weighing us down then? Why wasn't China weighing us down then? All of a sudden now, because China's going down, well, that's why the U.S. stock market's going down. It's all a bunch of fugazi. It's all a bunch of BS. But this is the Chinese market. It just looks horrible. It looks horrible. So, I do think that we will see a little bounce. This is the S&P 500, a daily chart now. So each one of these bars is 1 day, and this is where we're at now. And I do anticipate a little bounce, but I think this bounce is going to be the bounce where anyone who's long in here that wants to liquidate is going to liquidate around here. Okay, around here, anywhere in here, anywhere in this area. We're going to start liquidating, I think, and I think more shorts are going to pile into the market, and that'll drive it down. And if it doesn't, and we go straight up to new highs, well, then I was wrong. But guess what? In 5 or 10 years, if and when this happens again, I'll take the same exact bet, because these charts speak for themselves. Alright? They speak for themselves. So, we'll see what happens, man. These are fascinating times. We're just so overbought. Look at all this stuff. It's just crazy. And then we're finally getting sideways, and I do anticipate a nice drop. And it's just scary, when you think about it. From 2013, 213, 50% of that, you're talking like one, in the 100s, 105 or so. That's down here at the low of 2011. That is scary to think about, that we could just give all of this back like it's nothing over the next 1 to 3 years. And it's not out of the realm of possibility. Happened here, and it's a very real chance that it could happen here. Anyone telling you that it's not a real chance has no idea what they're talking about. So, hope you guys found this pretty cool. U.S. market is pretty fascinating right now, and it's always a good idea to keep an eye on it. And we will see how everything plays out. So, Traderstation, thanks for listening, guys. Sorry I haven't really been around in the chats. I'm doing a lot of day trading these days, intraday. Not like I'm taking 50 trades a day. I only really take 1 to 3 trades a day. But I really enjoy being engaged with the market. I enjoy watching the market. And I've exercised patience and discipline to do so. So that's why I think kind of day trading is more the thing for me. This is the futures market for the S&P 500 right now. This shaded region is overnight. So as you can see, happened twice now. Yesterday it happened too. We were going down, 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 down. But you can see it's not like there's still buyers. We go below here, buyers buy it up. Below here, buyers eventually buy it up. And we got bought up into the close. And the same kind of thing happened here. The bears just weren't, as far down as we went, it was very choppy. There was a lot of overlap. There was bad follow through by the bears. Bear bar, bull bar, bear bar, bull bar, bear bar, bull bar. And the whole thing, when we kept breaking down below things, we just shot up. Break down below this, we shoot up. Break down below this, we shoot up. So we ramped up into the close, and here we are overnight, because these things trade just like Forex, pretty much 24/5. And we're ramping up in the overnight session. And we may very well be looking at that bounce, and this may very well be one of the last bounces that anyone will get to either liquidate their longs or initiate shorts before something bigger comes. So just my 2 cents for what it's worth, guys. Traderstation, I'm still around, so please be in touch, and I'll see you guys in the chat. Thanks for listening. Peace.
Hello guys, it's Jeff from Traderstation. Strategy for option. So a new, really simple 10-minute expiry time strategy. 15-minute expiry time strategy actually. But I've only just started testing it. It seems to be doing well. I've used it a few times on IQ options trade, and has a 77% success rate at the moment. Moving averages, and it's really simple. It's just the 10 moving average is red line and green line, and you just wait for the blue line to cross over the red line, and you trade in that direction. Set your expiry time to 15 minutes, and it's as simple as that. That's how it goes. Now it's not 100% remember, and I have some testing it, but it seems to be checking out. I've got some examples here for you. Here, if you went in here after the crossover, if you set your expiry time to 15 minutes later, the price is lower. Over here, same thing here. If you set your expiry time to 15 minutes, you would have won if you bought from this point here. The crossover. So here as well, if you bought for 15 minutes, you would have won the trade, and over here, I really want to, I put a flag up here because I want to speak about this area in particular, mainly because when I like to use, when I trade binary options and I use, if I'm using it in the DMAs and using my crossover strategy, I like to use it in conjunction with price actions, support and resistance, these things. These things are always important, and to be honest, they're better than any indicator. To be honest, price action is key, so remember that. Because this area here, as you can see, if I zoom in here, it looked like it would possibly cross over upwards here. But there was strong resistance here. And if you had got, so really, even if it looked like it was about to cross over, that wouldn't have, like, I would have stayed away from there. I would not look to buy in this area because I know there's a lot of resistance here, so it doesn't really tick all the boxes for me. But as you can see, when it did hit this area, so yeah, this 1062 area, it bounced back down and it crossed over here. And if you use support and resistance in conjunction with this strategy, it gives you strong results because it fell hard from this level. As you can see here, if you got in at 5, 10, 15, 13, and 30 minutes expiry times, you would have won the trades. So now for example, again, now this area here I've highlighted because I wanted to make it clear that this strategy is not the best for a ranging environment. As you see, price was really choppy, and binary options full stop isn't that great. It's not that great trading it in these sorts of environments when price is really choppy, just up and down in really short space, because it's just really dangerous. You can't really, there's no keys, no signals telling you where price is going next. All you know is it's going sideways, and that's not healthy. So this strategy will not work in those kind of environments. But other than that, it seems to, if you use it in conjunction with price action and you know, just basic support resistance, supply and demand, those sorts of things, you'll be fine, I think. Yeah, it looks pretty good. Now, if you want to test it out, I suggest testing it out on a demo first. IQ Options offers a demo account. I'll leave a link to it in the description so you can check it out, play about with it, and see how it goes for you. You might even tweak it and make the strategy even better for yourself, and you know, maybe you'd like to share that too. So yeah, that'd be interesting. So I think that's it. That's all you need to know regarding this strategy. As for the Traderstation, we're offering a free trial for our Signal service. So if you want to get into that, contact info@thetraderstation.com. I'll leave all the instructions in the description so you can get through and join up if that's what you choose. Or just check out our website. We have tons and tons of info, not just for binary options, but for regular forex trading. Loads of blogs, loads of educational materials, strategies, videos. Yeah, so get in touch, leave some comments.